Rahul and Safir. I think you've read their bios and their profiles. It needs no introduction. So we've been given about 25 minutes with 10 minutes for questions. It's 3:35 right now, so I generally stick to time so that the proceedings, go off well. And we will have your questions towards the end if that's okay. So I'm going to start off with, Rahul. You've been very, very active as a fund in this sector, right? And not just the restaurant sector, but generally food and agri, and that's your focus. So what are the lessons that you feel that both owners and prospective owners over here who want to invest, their hard-earned money into a restaurant business today, which is the focus of the Congress today, what are the lessons that you feel that they should keep in mind before getting into a restaurant business? And then I will probably ask you a second follow-on question, which is looking ahead over the next 5 years, right? Not the immediate short term. Where do you think the restaurant business in India is going to grow? Is it going to be fast food? Is it going to be affordable casual dining? Is it, going to be fine dining? So if I had 4 crore rupees, should I take a franchise, in the first, the second, or the third, or maybe some other boutique concept, maybe a cafe, maybe set up something, very, very high-end or niche, which is understood by a few, but I make lots of margins, maybe something which is not very scalable. So I'm going to leave those 2 questions with you and, probably then come to the rest. Right? Okay, and we'll react maybe. Huh? Thank you.
Thanks. That's a handful to answer. So I'll start with the first. And I'll break it into 2 parts because you've asked a private equity guy. I think the underlying assumption is that you're looking for what works for an institutional investor, such as a private equity fund. But I would, first try to address the other side of the market. What may not necessarily work for a private equity investor may work for other categories of investors. So if I just look at, the formal food service side, so you have chain businesses. And institutional capital will always look for businesses which are scalable, that you can deploy a significant amount of capital in and grow that, using that capital. You also have scenarios and, meeting some of the people here, I think they fall in that category, where they are not in chains. They have standalone restaurants. And I was just looking at a segmentation about, in India, in the formal space, there's about 70,000 crores worth of revenues coming from this side, which are restaurants having less than 3 outlets. More than 3 outlets is 20,000 crores. So, this is the overwhelmingly larger part of the market, and most people are in that segment. And it's also sometimes a lifestyle choice. You might be doing something which is so unique or so local that it's not possible to scale up. So, these type of businesses will not attract institutional capital. And that's okay. Now coming to, the typical aspiration of people that, when they talk about approaching formal capital is that, I want to take it pan-India or I want to go international. In that necessarily your business has to have that portability and scalability. And demonstration of that is what, the capital provider would look at foremost. So the thing that, is most important is execution capability and demonstration of that execution capability. It's very easy to talk about the great Indian consumer, the huge middle class, virgin territory, all of that. But the fact is, there have been far too many accidents in this space. And if you see, the underlying causes or reasons for that, I think a large part of that has been due to very, very poor execution. So I think that is a common theme, whether it's a standalone restaurant or it's a chain, but it's more so required in a chain that you have to have that execution capability, and part of that ability to execute is also having the right team. It's not so important when you have, one restaurant, you could be the chef, operator, everything rolled into one. But as soon as you start trying to scale up, move into a new geography, you start facing, supply chain issues, quality, consistency. all these things become real challenges. And if you're looking to attract institutional capital, I would say that's the number one requirement from my side. And that is where, mistakes have happened in the past. The other area is, looking at, synergies when there were none, trying to build platforms without synergies, just trying to aggregate different concepts. I think the market has moved well and truly beyond that. People are looking at, specialists who can execute with in a very, very targeted fashion. So that's the other area where I see market moving. It addresses a bit of your second question, but we can talk more about that, where we see the market moving.
Right. So before we come to the second part, Safir, any thoughts on that? Lessons from the past.
Well, my role has been essentially of a strategist, and I've been involved with companies before they did a valuation or in a post-valuation scenario when they had to peg mark their performances. And my study of this has been that apart from the integrity factor, and just for the benefit of many of you who may not know this, that manpower or the capability of a management is a critical element in valuation of companies, and that really attracts a lot of people. Many of you may not be aware of this, but when the public issue of Tata Consultancy Services was being planned, the red herring prospectus before the SEBI was approved on the basis of the management capability itself, because otherwise they were only delivering services and nobody knew about the sustainability of business. And chefs around the world, are recognized by their capability of not only the food that they make, but also the ability to scale up and how much they'll be able to bind and attract talent and have good relations with franchisees or licensees. It's not just about them, it's also about the relations. And therefore, the integrity of the management is a critical part in the entire process, and it gives a greater sustainability to the earnings or what an institutional investor or a private equity investor or even a stock market investor looks at.
Right. So let's come to the second part, Rahul. Looking ahead, there are a lot of members of the audience here who are looking at investing their money in a restaurant concept. So looking ahead, which are the 3 or 4 hot concepts, if I may call them, or hot sectors, subsectors within the restaurant business that you would say or suggest to potential investors to focus their choices in? Something which is bound to attract investor interest, something which is picking up but has a high growth rate, small base but high growth rate. And you talked about, the chain restaurants being 70,000 crores, which is less than 3, and then 20,000 for more than 3 stores. So where do you think, which sub-segments are going to be hot? Is there something emerging that investors should take a look at? Or should we just, go by what we have done in the last 20 years, which is think of a foreign brand and say, I want to take a franchise of that in my hometown or near my hometown where I stay? Is that the approach?
As far as the Indian food service scene goes, I think we're literally at, the tip of an iceberg. There is so much room to grow in every sub-segment. Where, of course, the segment that you get in certainly provides a tailwind to you. And if you pick a sector which is growing at, 40-50% CAGR, certainly it helps. But that's not taking away, from a sector, subsector, which is maybe growing at 10-15% also. You could still grow pretty well. There are no sub-segments in the food service industry which are degrowing. That would be a mistake to get into a segment which is degrowing, or you're seeing, margins eroding. That's not really the case. In the entire listed space in the food service industry, the entire market cap is $3 billion. The global, market cap in food service is in excess of 500 billion. So there is tremendous, headroom for growth. But few themes which, seem to be coming out more prominently. One, I think, cafes are coming out quite strongly, particularly tea cafes and also cafes at the affordable end. That's one segment which is...
The likes of the MTRs, are you talking about?
No, small tea kiosks.
Murugan Italy or something like that? Are you talking about that as the affordable?
Small kiosks,
small kiosks.
Teapots, and you're finding a lot of startups also in this space. It's a scalable opportunity. People seem to be making, reasonable margin in this space, though margins do seem to be coming down over time in this space. The other macro trend, which seems to be picking up, is this entertainment plus food combination. You're finding, many more avenues coming up where, the kids can be entertained and you can stay there for a longer period of time, get food plus,
like a smash.
Smash, or your chokidani, or these type of concepts. They seem to be doing pretty well. Apart from what you'd find in typical restaurants just to keep you entertained. One could argue like in Barbecue Nation, it's actually the skewers in which you're doing the finishing at the table. It makes the customers more engaged and involved, and the kids have something to do, and while you're not actually cooking there, but you still feel part of that process.
The live food theater. Yeah.
Yes. So, and these are opportunities which you can, which are tailor-made for social media, and social media is playing a large part because people are moving away from just saying that I did this. It's more about having an experience, and an experience in a setting that you could tell your friends about and tweet about, all and these things are completely tailor-made for that. So you're finding this this theme picking up in a huge way. The other theme which seems to be coming across is food with a cause. And millennials typically tend to identify with that much more. It's like and this is in India, everything always skips a generation. So you're not seeing this very prominently in India at the moment, but in US, it's become a very definite trend. That you talk about the sourcing of your food. You talk about the local jobs you're creating. You talk about how your food may be changing lives, and people are willing to pay a premium for that kind of food or experience. So I'm finding some of this slowly coming in on the consumer side, and I think on the food service side also it will start coming in. Things like ethical sourcing of milk, or now people are starting to make products out
Organic
of that.
versus inorganic kind of thing, yeah?
Yes.
Okay. All right.
It's not only about organic and inorganic, it's about local produce.
Local
Now you
produce,
have people saying that, this is made by happy Himalayan women. Products like that. You have now restaurants saying that, this is made by, a particular region in Bihar. These are, local delicacies there. The raw material was sourced there.
Right.
So, those kind of themes are the story behind, what you're eating, what you're consuming. Right. I think that's resonating particularly well with millennials.
Understand. Well, that's very rich insights. I mean, as a prospective, investor sitting here in the audience, if you wanted to look at the concepts that you should be sort of spending your time over, I didn't hear the typical, the fast food ones, but I'm certainly seeing a lot of interest in the cafes still, the tea one. Coffee has been, I think, done, and there are too many players, and the large players are obviously there, and it's been done. But tea definitely is coming up, and more the portable format, so that you can access it everywhere. In a way, look what McDonald's did to the country, and many of the burger chains did to the country, but more credit to McDonald's, was actually convert people from street food onto QSR or fast food, where you got the price that you wanted, but you also got the product and the environment which you missed on the street, which was hygiene, air conditioned, all of that, etc. And that's how the story of fast food began in India about 20 years ago. Moving on, thanks a lot, Rahul, for the insights. There are always these financial factors which are important in valuation. But I want to turn my attention to Ajit, who's been a long-time veteran. He's been involved with the airline hospitality, airline catering business in a big way. And he's with us on this panel. What are the non-financial factors? So let's say I had 3 concepts to invest in as an investor, as an institutional investor, and I saw more or less similar financials. Which one would you pick and why? So what are the top 2 or 3 which you would share, so that many of our business owners who are looking at investors coming in and encashing a part of their stake and obviously current business owners who are looking at it down the line can benefit from your advice?
This is really an interesting question, and in fact, in my own experience, for several decades, whenever my own company for which I was working went through acquisition, or somebody acquired a stake, or we divested, I really saw, and particularly when we were dealing with foreign companies, we were dealing with large multinationals, we saw their approach was very different. Financials was important. A business plan is very important. How will you do, what will be your sales 5 years from now, 10 years from now? But 2-3 things which attracted my attention, and I've been focusing on it. One is, what's your mission? What is your core value? How will you execute it? He just mentioned about execution. In fact, when we started Sky Gourmet, execution was the key. And particularly India is full of hurdles. If you don't have talent, you are going to go nowhere, in my view. This business plan only remains on paper. And I have seen that typically small investors, owners, sometimes they say, come on now, what is this core value, etc. You're talking this looks very academic. But I can tell you from my experience, the businesses which are really going to scale up, they have a clear vision, they have a clear mission. Their core value is known to the owner, investor, founder, whatever word you want to give. And he is also very clear, he or she is very clear about the kind of talent which is surrounding him or her, or how will she bring, or how will he bring the talent on board. So this is one factor that at least attracted my attention, and I always look at in LMAC Capital Advisors also, whenever we get an opportunity, I always look at this. The second one is that we have heard, the customer experience should be great. And sometimes I ask, what is this great experience all about? Oh, no, the customer should be happy, and sometimes we give those cards, they rate on a scale of 1 to 10, you get 8 marks, 7 marks, 6 marks. But I think the world has moved beyond that. In fact, there is a whole lot of science. We may not have this session here devoted to it, but I can only tell you that if you are really serious about delighting customer, you have to take a deep dive into that science of what is this customer experience. You have to demystify it. And what is interesting really is, if you look at the research, the academic research as well as practical research, both in India and outside of India, typically in US and other places, it clearly tells you that if your quality of experience, or technically it's called service quality, is superior, it leads to customer loyalty. It's a very important concept. If you have a leaking bucket situation, which means I put 1,000 customers from one end and 900 leak out from the other, it's not a sustainable business. This is not going to work. And how do you cultivate this loyalty, I think is a big challenge in my view. And sometimes the key to profitability. Also the key to charging a small premium, which could make all the difference between a profitable venture and an unprofitable venture. Sometimes these margins could be 3 to 5%. In some businesses, may not be food businesses, could be 5 to 10%. It is this range, but these are huge numbers. When you are talking of a scalable business, we are talking huge numbers on 3%, 5%. These are very large numbers. The third thing is, which sort of attracts my attention, is that do you have world-class processes? In India, I have seen, and I am an Indian, so I have no shame in saying, I've gone through all this. I was fortunate to have worked with best of the Indian companies. We are quite myopic in our approach. I have to be just honest about it. We think we are quite smart. Yeah. We don't want to, or we just hear anecdotal sort of things. You know, those so-and-so companies, McDonald's is doing this, Domino's is doing this. We really don't invest in a true sense in creating world-class processes. We also don't pay attention to sustainable cost structures. Sometimes we also, in a hurry to scale, we create overheads. And then suddenly we realize, oh my God, now things are getting out of control. Not only in food, I'll share my experience with you, you know, in many other industries, this thing is happening. And then we start looking at, oh my God, now we have to fire employees, we have to get rid of so many things. And it's a helter-skelter situation in which the investor is now asking you to shape up and gives you a certain time frame. You want to raise $10 million for the next round of funding, and he puts 10 conditions. And then you are caught between the devil and the deep sea. You don't have time, you have to do something dramatically different in a very short time frame and a very haphazard manner. And I have seen many companies actually literally go down the drain, you know, because in first instance they did not invest, they did not pay attention to either talent or creating world-class processes. I believe. These are a couple of things one could look at.
Yeah. Totally agree with that. And I think I'd like to, you know, sort of straight away jump to Safir and ask you, in addition to what you heard, Ajit, and I think there's a great points, you in your capacity, you know, as an expert in trademarks, intellectual property rights, you've helped companies, you know, negotiate a lot of due diligence, write out the franchise agreements, etc. So going beyond the financials, and to add to those points, what are the things that really help differentiate a good investment from an investor's point of view beyond the financials? What are the things that add value? What would I pay a premium for? And that's very important, because when I have, you know, three exactly same, you know, investable propositions from a financial point of view, quality of management is good, the brand is equally strong, right? What are the other things?
So I'll attempt to answer this question amalgamating 4 different roles. I'll bring in the role of a lawyer, which I am, a role of an investor, a role of a consumer that all of us are, and also a role of, for example, somebody who looks at valuation, and also bring in a little bit of student in me who likes to pursue the study of companies to see where value unlocking happens. You know, there's a fantastic book written by a guy called Andrew Matonsky who talks about a concept called value migration. And there has not been a single instance in any industry where when value was migrating, a huge amount of value was not created. To give you an example from other industries, because the logic applies to food and it applies to aviation and it applies to any industry. If you look at the airline industry, you had a limited number of carriers in India. And all of a sudden, you open the sector to a large number of private carriers. And all of a sudden, the paradigm of services changed. It moved away from a basic transportation mechanism to something where you started looking forward to the check-in facility, the sort of service you got inside a flight, etc. The same value migration happened between PSU banks and private banks, and you see the kind of value that has been created for private banks at the cost of public banks. In the food industry also, value migration plays a critical part. People no longer come to restaurants to satisfy one basic facet, which is hunger, because if they do, then they'll only pay you a commodity price for it. They don't have to pay you value-added price. Your competition will set in, and it'll only be a war of retail space and the sort of rentals that you pay. And eventually, you will have a lot of people leaving the organization, so you will not have any manpower retention, you will not have any recipes, and you will not have something. So to sustain a business, you'll have to bring in some level of uniqueness. Now, the combination of uniqueness will be peculiar to your business. If you look at your phone is no longer your phone. Your phone has replaced a calculator, it has replaced a watch, it's replaced a camera, it's done multiple things at the same price. Similarly, in the food industry, when you say that I have to go out to a restaurant and you discover that it's about the ambience, it's about secret ingredients that are protected under the law of trade secrets. It's about a group of people who render service to you that stands differentiated from somebody else, that aspiration of yours to come back there because you want to experience that service. The ambience created by that place, sometimes by just giving you special treatment. You may be special in your own assessment of it, but they will treat many other people as special, and you will like that treatment in front of guests, and therefore you will sort of replicate that. The ability of consistency that sets in into a restaurant. You don't want to go to one Sagar Ratna, for example, in one part of town and another Sagar Ratna to be disappointed and discover that you could have just gone to the first one in the place. The ability to innovate, because innovation has the highest amount of valuation. Today's world is about disruptive innovation. It is no longer about anything else. So if you look at businesses, a lot of businesses that traditionally made a single product have evolved and made regional products, and those regional products cater to retaste. And just an example of that is what Britannia is doing on the biscuit side. In terms of migrating away from a basic biscuit category like a Tiger biscuit into cream-based and biscuits. McDonald's is moving away into owning the breakfast space. And there are many such examples. And when you bring in all this within the realm of intellectual property, which is through trademarks, through patents, through copyrights, through controlling your employees and trade secrets, through trade dress, that is the look and feel of a restaurant, and the look and feel of a website, look and feel of a menu, maybe designated items like a dal bukhara is unique. You cannot have a second dal bukhara in the world. In many marriages you go, they serve a dal and they call it dal bukhara. They're entitled to take legal action and even demand royalties out of it. Then you're creating a business model that will have the valuation team assess you and say that, even if you get knocked off on a few things, you'll have things in place. And that should sustain a valuation for your business going ahead. And the ability to enforce after that, because once you have a right, you must also use it.
Could you give one or two examples that could make it, and it may not be necessarily from the restaurant business, but it would be great if it is from the restaurant business, on a couple of things which you just mentioned, which were the unique sort of patented intellectual properties that a business created, which potentially or in actuality, it actually did fetch a premium, let's say in a place where they were, placed adjacent to two other opportunities for investors.
Yeah, if you just
and then I'll ask for Rahul's comment on that.
Yeah, I'll give an example of a business that we worked in when they came to India. Domino's Pizza, if you see, when they came to India, they first spent a few years in trying to erase memory of people to the fact that Domino's could have been a game. So they litigated against parties who had several kinds of Dominoes. You may be familiar with the fact that there's a cookie brand in the market called Domino's. It belongs to the legal heirs of Shankar Jaikishan. They went and negotiated and bought rights and said, you can make biscuits, but don't get into anything beyond that, because once they were to expand their business, they needed a clean slate. Then they went into several forms of protection. Domino's is a India-based domain name. Domino's is the trademark. The look and feel of the box. They experimented a lot in the delivery system. The fact that they, some of their ad campaigns that you may have seen or are on YouTube, they actually show people being obstacles to the 30-minute delivery rule, and they wanted it to be well entrenched in the mind of people that we are about convenience. And that's what I was talking about, value migration. It's not just about getting a pizza, but getting a pizza home, getting a pizza hot, getting a pizza within 30 minutes and at a very transparent price. And then having interesting things like giving you coupons that will attract you to repeat purchases, having a mobile system registration that enables them to have a database and therefore monitor your taste. A lot of regionalizations. Hungry Kya campaign came only for India, because they knew that to relate to people in India, they should, relate to something that somebody could understand. Having regional flavors which were peculiar to them, like use of paneer in pizzas as opposed to cheese, was all at the behest. And then having an adequate system of, measuring performance. They experimented with desserts and found that the Indian palate was not so conducive to the dessert, discontinued that immediately without impairing the business, and therefore made a success story and, ended up being one of the largest market cap companies in food.
So Rahul, your comment on that. So what would you attach a premium to? What, as a restaurant business owner, if I was to go out and patent or put an intellectual property right, or should I actually go ahead and do that, because it takes my time and it takes a bit of money to sort of go ahead and do that, but do investors place a premium on some of these things in addition to the financials? For example, if I have a patent on packaging If I have a patent on a shape of a dessert that I have constructed in my kitchen with my chef, and like you're saying, dal bukhara, for example. So, so is there a premium on these things when you actually value businesses?
Yes, there is, but it depends on how you eventually monetize that. You see that there's no money attached for IP, for the grand idea of IP. Eventually, you need to demonstrate to an investor that you have a plan to monetize that. Either you use it in your own business, or it is something that you could potentially sell to somebody else who would attach a certain value to it.
Yep.
So when you would make out a long-term business plan, now if you have a dessert which is differently shaped, your ultimate idea is that maybe there is at least your claim would be that because of this differentiated offering, more people would want to have it, and thus I might get extra volumes, or I might get a certain differential pricing because of that. Eventually, it'll translate into your financials.
Yep.
So you need to demonstrate that pretty succinctly on how that value capture is going to happen.
Understand.
And an investor can thus in his
so ability to
discounted
charge a higher
cash flow.
price or having a higher margin on a similar category product.
So there are things which are strategic. It creates a moat around a business. That is also something which you would value over a long period of time, because that'll reflect in the type of cash flows that you're showing from your business.
Yeah, I just wanted to chip in a point. When we are on the other side and due diligences are happening and private equity or IPOs are happening, in a lot of these intellectual property, the managements would be taking decisions because they know there's going to be an earning. I mean, just to run a question around the audience, you have a famous sweet chain in Delhi called Agarwal Sweets. Please tell me who owns it. If you're going to struggle to
Mr.
tell
Agarwal.
me,
Right?
if you struggle to tell me who owns Agarwal Sweets, and yet you know that there could be Agarwal Sweets, you're not sure about who owns it, and there could be multiple owners, then you've defeated the very purpose of intellectual property. Because when you created an intellectual property, you didn't go ahead and protect it. And that would sever your monetization, and therefore, even if somebody had invested in the business early, he would be at the risk of loss of capital rather than anything
That's
else.
a great example. So we are running short of time, as I've been just indicated. So questions from the audience. I hope you found this useful so far. Any questions? No questions. That means this discussion was really very useful, and we've answered all your questions.
No, I have one.
Oh, great.
It's not that useful. No, it's very, very useful. And I run a delivery joint out of Noida, and I am now looking to expand. But I would like to believe that there is enough for me or my business to bootstrap this growth. So do you fend off bootstrappers as, well, your business plan's rejected, or do you really look at helping them get to the idea of bootstrapping? I'm talking about the investors in the panel. Do you really think that bootstrapping in food is a possibility? And do you help those guys understand the idea of bootstrapping?
No, absolutely. I think bootstrapping a business is really the way to go about it. And especially in the food industry, where it's very difficult to actually demonstrate on how the idea will pan out, right? So the best way of doing that is to, at least show it at a model level that, at an outlet level or a smaller unit level, this concept works. And, the investors will follow. I don't think there's anything, and anybody would, look at a bootstrap operation as a negative. I think it's one of the biggest positives that, one could have, that a promoter is, fully invested. He's willing to put his own time and money at stake rather than, waiting on the sidelines with a piece of paper, otherwise known as a business plan, hoping somebody will fund him and, risks playing off somebody else's money.
Absolutely, I second that. Yeah, having skin in the game in any industry always works, and especially for a promoter. And if you're just sort of extending that, if you're running your own brand, or if you're a franchisee of a local brand, or if you're a franchisee of a multinational brand, all you've got to do is benchmark what you're achieving versus the best in the business. That is, if you're the first store, then you're the first store. But if you're the 100th store, then how are you comparing with the best-in-class stores of that particular brand? Right? So you compare yourself with the best, and that is what will be considered more important. And there's a lot of respect attached with bootstrapping. So I have a stake in a venture. Unless I have that, I'm not going to be going to somebody else and say, I have belief in this venture. You have to put your money where you feel your convictions are. Yeah. Any other questions? Otherwise, we'll just on behalf of everyone here, I don't see any hands. Just thank the panel. Thank you, Safir, for your valuable time. I know you have to rush somewhere. Thank you, Rahul. And Ajit, we missed out on the data part of it, but maybe we'll catch up on that offline. So Ajit, just mentioned about the importance of data assets. You are sitting as a restaurant owner on very rich consumer data. How are you monetizing or thinking of monetizing that data? Just leave you with that. That's also added value to the business these days, because a lot of business is coming from online. So you're capturing consumer behavioral data. So just think about that. That adds value to the restaurant business. It's not just the sales that you're clocking, but how you're monetizing the data as well. Yeah. Thank you very much.
Thank you.
Yeah.
Thank you. Thank you.
Well, thank you very much indeed. I'm going to request our session moderator, Mr. Anup Jain, to please present the mementos to fellow panel members as well. Thanks a lot. Ladies and gentlemen, and on that beautiful note, we're about to get started with our next session as well. Now, we all know that with the advent of hyperlocal services which are competing with each other to reach us the fastest, offering the widest of the variety and enticing us with attractive discounts, it's the customers where they've started valuing convenience over experience. Now, how is this delivery business changing the way people order food? So let's find that out in our session here. Once again, we have with us Mr. Sahil Jain, who's a co-founder of Dine Out, and who's going to be sharing his perspectives with all of us. So let me please invite on stage Mr. Sahil Jain. Well, he's here again, back again on the stage, so let's welcome him with a huge round of applause.
Gangnam Style. 낮에는 따사로운 인간적인 여자 커피 한 잔에 여유를 아는 품격 있는 여자 밤이 오면 심장이 뜨거워지는 여자 그런 반전 있는 여자